De eerste tijd dat dit is basketball. Ja, but it's based on
Okay, morning everyone. Let's get it going. All right. U.S. stocks on Friday sold off a little bit actually for the first time in a little while. Nothing too significant. We're about 0.5% on the S&P, about 0.5% down on the Nasdaq, but lower nonetheless. Something a little bit different than normal. Maybe led down by a couple of the earnings reports from the previous day. We had Amazon that was out the after hours the day before. It was down 10% on the day. We also had Visa, which came out with decent numbers, but their guidance wasn't great. Probably in trouble maybe a little bit over some of the futures of a lot of these electronic payments. And the negative outlook took Visa down a little bit, making the Dow component specifically a little bit heavier than the rest of the indexes. We also had durable goods orders for June that rose more than expected, and so we continue to see that same sort of thing happening with data points that continue to come out better than expected for the most points. So, if we look at what happened in Asia overnight, we had a huge night out of Shanghai. It was the first day that I can remember us moving up 2+% in Shanghai, and I would say over a year. It's been a really long time. And we had some positive data there. Basically, industrial profits for June came in 18% stronger than a year ago, really taking things higher. And Shanghai has actually kind of outperformed in the last several sessions. So that's maybe a positive surprise, maybe helping take some of these mining stocks on our bourse higher over the last few sessions, which have really been such major underperformers for the last little while. We also had Tokyo and Hang Seng and Kospi, which also closed in the green on the day. So, but not a whole lot of leadership in those markets. All right, out of the local market here, we got one stock that's going ex-div. That's Investec for 1 Rand 96. Keep an eye on that if you're going to be playing in it this morning. We've also got some market data out this morning. Nothing too significant. Eurozone very quiet today. We've got business confidence out of Italy. That's it at 10 o'clock. And then the States later, we've got composite PMI, services PMI, home sales, and Dallas Fed manufacturing numbers. So the really big points for this week, if I think, are going to be the Tuesday-Thursday Fed meeting, or sorry, Tuesday-Wednesday, I believe, Fed meetings, and we're going to have them release the minutes of those meetings on Wednesday, if I'm not mistaken. And some people that are thinking that Yellen may slightly change the tone to some of her rhetoric in those minutes, or not Yellen specifically, but the Fed. And so I think the market's definitely going to be waiting with anticipation for that. All right, let's get into the maps. Okay, the first thing we're going to have a look at here is probably one of the more obvious charts, because we've talked about this. I'm going to actually have to back up further than 2 years to have a look at that. Look at the 5-year chart here in Anglos. I'm actually just going to go out just a little bit further back, but you can see here we know where the major levels are there. The major level is at 288. Sorry, there's a wick there, so it makes it a little bit difficult to really clearly see it. I'll try to zoom it in a little bit more. That's why I was trying to look at it in the 2-year chart. But bottom line is, without question, you can see I'm actually going to take this down a little bit lower because we're drawing this thing at the wicks, and I don't think that's the level. I think the level's here, which is 288. 288 is definitely the level in my mind. In Anglos, we broke out above that. We punched through 290, and I think unquestionably that we've definitely broke out in some sort of closing basis here in Anglos. If you have a look at this setup, the pullbacks have kind of been getting a little bit smaller and a little bit smaller and a little bit smaller as we go along here. And like we said a second ago, when you look at the big picture here, it would definitely look like we've got a significantly higher chart. And it actually, to an extent, it almost looks like it could be a little bit of the big ugly head and shoulder with this sort of level being a shoulder maybe a little oddball shoulder here and a head here, but either way you look at it, we've gotten above 288. It's incredibly significant. You guys can see how the size of the move that we should get out of this. I mean, we should get a massive rip above 300. I would expect a short-term move to as much as 320 in the near term. All right. We'll look at bulletins while we're talking about the sector here. I just want to kind of look because they're all breaking out here. Glencore is also flying after it's broken out. You can see bulletins is broken out after being in this little consolidation phase, and we finally broke out of that consolidation phase, and that probably should have been where we really jumped on it. But we've bumped up through all-time highs here, and really for the most part we've just been consolidating. We've had probably a good week and a half of consolidation here right on top of the breakout level, and definitely looking like it's ready to continue on its trend in the same direction here. So just kind of to give you an overview of really what we're looking at in the sector, they're all looking very, very solid, very strong at the moment. So I wouldn't expect a turnaround anytime too soon in these shares. All right, let's look at MediClinic. MediClinic, this is it's not incredibly definitive here, but also potentially making a little bit of a head and shoulder setup here if we drop 84. This is very small. It's very short term. We should probably be looking at this on the 30-minute chart. But bottom line, if we drop 84, we could probably see as much as $3 or $4 quickly here. It might be worth avoiding on the long side in the next couple of days. So I guess that's the real reason to kind of point that out. All right, let's look at growth point here. We'll have a look at this on the 2-year. And you can see we've definitely set some resistance, a bit of a line in the sand here at 25. And this will be about the 4th time that we would have touched this level over the past 3 or 4 months. And, I think that the interest rate cycle doesn't look quite as steep as what it was looking like a few months ago for us. Probably the reason why the interest rate sensitives have started to outperform maybe relative to the rest of the market as of recently, and I think that this one's no different. Obviously, if you look here, you can see that we probably, if we break above 25, we've probably got a quick $1.50 or so to the upside and growth point. All right, let's look at okay, there we go. CFR, okay, we're looking at a 2-year again here. CFR definitely came down on Friday to test some sort of support here. I mean, we ripped up here, and we've just been in this little sideways, maybe broadening formation going on in CFR for, it seems like forever. This thing seems like it's been right at around or just a hair below 100 or above for such a long time now, and you can see it's been a full year now that we've been kind of up at these levels, and like I said, this has been a really hard one to play because the breakouts have kind of been a non-event, and then you get the pullbacks back to support. I mean, buying it on support's definitely been what the play has been. And you can see there we held a support level at 102. We dropped it briefly intraday right at the beginning of the session after a downgrade from Barclays, after a weak earnings report out of LVMH. But I think as long as we hold 102 here on the maps, then I think that we, this might be worth a little bit of a nibble. It's fallen pretty hard here, about 10% off the tops recently. It might be worth a little bit of a nibble on a dead cat bounce, especially if we see a reversal off these levels. All right, and the last one that we're going to look at is Admiral Group in the UK. We'll look at this as well on a 1-year, and you can see just dropping out of a head and shoulder pattern on in fact on Thursday, and you can see we're really just continuing on Friday. This thing's already reached probably a big part of its target, but definitely turning down hard here, and probably a target to as low as maybe 1430, 1440, something along those lines. And that's it for today, guys. Happy trading out there.